Hello friends, I welcome you all to this video. Today we are going to discuss about the gaps that appears on the chart, how they are formed and what does they mean when we are trading. Basically, gap on the charts indicates that people were not interested in trading on that particular time for that price. This sentiment of the traders create visible gaps on the charts. There are three major types of gaps which are formed by the reaction of market sentiments, and those are breakaway gaps, runaway gaps, and exhaustion gaps. So we are going to see these gaps one by one. The first gap we are going to see is the breakaway gap. These gaps are unique in nature. They takes time to appear on the charts and they can happen at any time on any chart. Breakaway gaps are generally formed on the downtrend market. If you have not watched my previous video on market trends where I have explained everything about the three major trends that operates in the market, please go and watch that video to clear all your doubts. What happens in the breakaway gap is price stays same support level for multiple times and it fails to break the support level. Hence, this activity in the market forces stock price to form a gap and it continues to trade after that. Second type of gap that appears on the chart is runaway gap. It is similar to the breakaway gap, but here's the catch. Instead of going downside, the runaway gap suddenly goes upside, forming a gap on trading activity. I'm going to show you three major types in which runaway gaps can occur on charts. The first one, as you can see here, price is coming all the way from upside to downside, testing this support level and going upside till here and forming a gap. And after the gap formation, price goes all the way up for trading next price. The second type of runaway gap is price comes all the way down to support level and slingshots directly to the higher price and trade higher from that price. Third way is price stays in uptrend, bounces back to the certain amount and trades higher than the last traded price. So in conclusion, runaway gap is basically a stock price jumping up towards a new level. This usually happens when there's a new product release in the market or the release of positive earning report. And third and last type of gap is exhaustion gap. Exhaustion gaps are my favorite to trade in the market. If you know where the trend may show some kind of reversal in the market, that is the time when exhaustion gaps can be seen easily in the market. But if you don't know how to trade these gaps can put you in its danger trap. Let me show you the example of exhaustion gap on chart. Exhaustion gaps are generally formed on the uptrend market where you can see here the market is in uptrend since very long time and it has formed a gap here, and if you observe the gap or the slope of this movement, it is not a healthy start or a healthy movement for the stock to form this kind of slope. Hence, the exhaustion gaps get filled right after it has formed a gap on a trading chart. If you want to watch more videos on the stock market and price action, please subscribe to the Monk Trader YouTube channel and press the bell icon to get notified. Thank you.